Okay, so this is my one-day yellow capitulation ring chart. If you watched my previous videos, again, watch my previous video. I have a link for it at the end and also in the description. I go into more detail about some of the stuff, but I'm going to kind of go through this as fast as possible. But we crossed this ring, we dropped from 6K to 3K. This is all the same fib circle, this yellow one. You can see we crossed this yellow ring, we had a drop. We kind of found support, we crossed it, we had a drop, we pushed above it. As soon as we crossed it, we had a second drop. We rode up this yellow ring. You can see we found resistance underneath this trend line. We found support on this red ring. Take note, this red ring is also the same ring. This is the next ring in the same fib circle. This is where we bottomed. That's why when we crash, I'm expecting this to be our first support level. If this does not hold, the next support level down below will be this red ring. Again, this is all the same fib circle. So again, a lot of people were saying, well, you know, price is pushing up. We haven't crashed. You are wrong. No, I don't think I'm wrong. I think the crash is still coming. I'm going to show you why I believe that's the case, why this is pushing up, why this is taking a lot longer. Again, I expect this to crash a while ago. I think this is tied in with the stock market. But you can see this was our resistance, just like we had resistance here, except we pushed up. Again, they're not going to make this easy for you to short. If you know, longs are stacked more than shorts, but there still are shorts. People are in a lot of short positions, so it makes sense they're going to push price up to stop out and liquidate those shorts, get people to FOMO, get more longs to stack. When people are bullish, then they send the price down. It just makes sense there would be a pump before a dump. And I think this is the point where, you know, we're almost topped out. We're ready for this to start coming down. It does depend a lot on the stock market. We're going to cover that as well. Again, I'm not going to give or get too involved with this. You can watch previous video or explain it, but you know, I think a lot of people, this is our previous bear market, 2014, 2015. This is our current bear market. You know, a lot of people think that this right here is this right here. They think this is where we bottomed. This was our bottom. I do not believe that's the case. I think most people have it wrong. I think this right here is this right here. If you watch that video, I go into detail about it, but you know, this would be equivalent where we dropped from 6K to 3K right here. Notice this is where we pushed up right here. When we dropped right down to where we pushed up from. If you go over here to our current bear market, you know, this is where we dropped from 6K to 3K. This is where we went sideways and we pushed up. If you draw a line right from where we pushed up, that happened to be right where we bottomed. That matches up completely with our previous bear market. I'm not saying it has to play out the same. I'm just saying it's playing out very similar. So, you know, if we do a, if we measure from here down to where we bottomed in 2015, you know, that's roughly 65%. So if we come down 65% from here, I'm not saying we have to come down this low, but if it plays out exactly, if we come down 65%, that takes us right here. And put a little line right here. So, you know, it's very possible we could drop as low as 1,300, possibly 1,400. I'm not saying we have to. That is pretty bearish. But again, if this plays out how this is playing out, it is very possible. Let me see if I can scale this. You know, it could be something like this, and it could take longer. It doesn't have to play out as fast as this. But it's very possible that we have little steps down, we go sideways, you know, we drop, we get a pump, we get a drop, pump, and, you know, we could bottom as low as this point. You know, I think 3,000 is a safe bet. Don't forget, we got a gap right there at 3,500 area. But again, guys, this is why I'm so bearish. I expect us to still come down all of this, just like we did back here. Let's see. So this, again, one reason, if you go back, this is Bitcoin compared to the S&P 500. If you'll notice, this was our peak in December 2013. This is where we bottomed in January 2015. You'll notice that I marked off kind of the same dates on the S&P. You'll notice there's not much correlation between our previous bear market and the stock market. But if you come over here, you can see there's a lot of correlation. You know, where we peaked up here in December 2017, you know, that was right before our peak right here in the stock market. When we dropped from 6K to 3K, you can see the stock market was coming down, and then we pushed up. This is where we topped out at 14K. You know, Bitcoin was, the stock market was pushing up. Bitcoin topped out up here, and then this is where the stock market crashed. Again, this is S&P. You can see this is where the S&P crashed. We came all the way down here to 21,087, and Bitcoin crashed as well. We had this little V-shaped recovery Bitcoin came up also. So back here it wasn't as correlated. Now it is. There's a lot of investors, you know, institutional money's in. They're also in the stock market. You know, you got apps like Robinhood. We're going to cover that as well. People can buy and sell easily. So again, it is very correlated. So the reason we haven't crashed yet, and I'm going to cover this as well, you know, the Fed's propping up the stock market. They're worried like hell that it's going to crash. They don't want to lose control, so they need to keep this propped up as long as they can. But I think it's got to the point where they can't keep it up anymore. Again, this is the Dow Jones. I'm not going to go into too much detail here, but this is just showing you the same thing with S&P. There's not much correlation back here in 2014, 2015, but you can see it seems very correlated. Let me try to match this up. It's very correlated. You know, our current bear market. Got our peak. You know, we peaked right here. We dropped from 6K to 3K. You can see we started dropping here. We started pushing up. This is where we peaked at 14K. Same thing. This is where we had our last crash because of COVID. And we had a crash and we pushed back up. So again, I'm just saying it's a lot more correlated now. It wasn't correlated back then. So again, the reason we haven't crashed yet is because the stock market is being propped up and it's keeping Bitcoin up. Before we get into those other things, again, guys, while yes, I'm bearish, if we push up, the highest I see us going is around potentially 9,980 right here. This is around 10,000. If we push above that, your resistance will be this line right here. I do not see us going above this point. If we get above this, I will be bullish because this is a very strong support and resistance level. And again, you know, if I expect to potentially get rejected if we push up here. I'm not expecting us to push this high. If we do, you know, I think we'll reject it and come down. But if we found support here, I would sell at this point because I do not see us getting above that. Again, if we do, super bullish. But the reason I don't see us getting above that is because this trend line, and this is the Coinbase chart, it doesn't go back that far, but notice that we got resistance here, we got resistance here, resistance there. It was support right here. It was support and resistance right here. Look how far back this goes. This was a resistance, this was support. And follow this all the way back. You know, this is right here at this is 2017. This is still support going all the way back to 2015. So this is a very strong support and resistance level to break. So again, the line in the sand for me to be bullish would be breaking above this point right here. And if when we do have that major crash, also keep in mind the golden zone. This is a fib retracement from the bottom to the top. I think everybody will be buying in the 0.618. So when we do drop, expect to catch a pretty good bounce around 6,375. Most people will buy there, but I think it'll be short-lived. We'll be coming back down. I did want to cover that real quick. So the reason I think we're coming down, you can see COVID cases are spiking. On July 17th, we had 75,821 cases in one day. You can see we get these little dips and we get spikes. July 23rd, we have 70,719 cases. Again, this is getting out of control. You can see this here. This is the debt of the United States of America from June 2019 to June 2020. Take note. I mean, it was already moving up and kind of sideways, but right here, March 20th, it just spiked, shot straight up, and we've been going up ever since. And if you go back, I mean, look, this is when it all started. This is when the cases started spiking, March 20th. You know, the cases started going up. The debt, the United States debt started going up even faster. Why? Because they were buying bonds. They're doing whatever they can to prop up the stock market because they're just, like I said, they're terrified of this crashing. They need to do whatever they can to keep this propped up. But I think it's got to the point where they can't do this any longer. We're going to cover Robinhood as well. I think that, again, if you use Robinhood, I'm not saying you're dumb money, but a lot of dumb money is Robinhood. In Robinhood, these are you know, trades and users. But look at the spike. This would be around. This is January. This is May. So this would be around March. You know, people were in there was a lockdown. People were at home. You know, there's nothing to do, so they were trading. Look how this just went straight up, just went parabolic. You know, it was just kind of sideways and up. But at this point, I mean, just bam, straight up. So a lot of people they're buying overpriced stocks. They're FOMOing in. I mean, the most popular stocks right now, Amazon, Tesla, Netflix, these are so overvalued, and people are still buying in. They're FOMOing in like crazy. But smart money is getting out. You know what happens to dumb money, right? It transfers hands to smart money. Dumb money loses money. Smart money takes dumb money. if you go here, you know, this is this is the U.S. debt clock. Let me make sure I cover this. So this was you know, the stocks are buying. So this is the U.S. national debt. Look how fast this is ticking up. We're at $26.5 trillion in debt. You can see our household assets is just counting down, going down faster and faster. U.S. total national assets is counting down. I mean, this is just insane. Everybody, like, look, you can see gold. I mean, we found support, guys. I have stocks, precious metals, you know, as well as Bitcoin and altcoin charts. Our next target for gold, if we continue up, is $1,948.